we are in South Africa. Property appreciation, in my view and what I've been reading, I see from a town perspective that Cape Town has a greater appreciation compared to most of the other cities. This is a general comment, because if we take in consideration smaller other areas or neighborhoods, that argument might not hold. But this is just from a general perspective. What is the cause of that then?
I think the major role is the economic activities that are happening in Cape Town. Cape Town is one of the best tourist or tourism attraction in South Africa.
Right.
So obviously a lot of economic activities that are happening there, and because of a lot of tourists or a lot of other people around the world are buying properties in Cape Town, and also like I said,
how's it going? It is I again, Taurai, Jack, TJ, your boy, and we're coming out live again. You can see I've got my guest on again, my resident host for X. You know that. He's here. Hey, Lebo, how's it going, man?
I'm all right. How are you, TJ?
All good, brother. All good. You had a good week?
I had a great week, man. I had a very productive week. One of the projects I've been working on for the longest time.
I can see you ignoring me, then. Eh? I can see that.
Yeah, no, I got cleaned up a bit this week.
Right, you went to the salon. You went to the salon.
Yeah, no, we need to keep a clean look, especially if we're dealing with people.
100%. You're looking fresh, brother. Good to having you back. And what's been happening this week for you in projects?
Yeah, well, I got one of finally got one of my projects that I've been working on for the longest time registered only yesterday after this whole time. That was exciting. So I'm doing it with one of my mentors. Right. And he was also excited that after 300 years, we finally got our first deal registered together. So it was exciting news. And other projects as well. We are, we're coming all right. We've been busy, preparing for them, and we just want to add one more before the end of the year into the book. So we're just working towards compiling that so that we can execute.
Okay, but I want to speak, Lebo, briefly before we go into the topic for today.
Yes.
When did you start? When did you sign for this project here that you're talking about?
I actually signed the initial agreement. We signed it last year, October.
Last year,
and
2019.
Yes, 2019. So 2019 October. That's when we signed the initial agreement between the parties involved.
Sure.
And in January, February this year, we signed for the transfer documents.
Right.
So only now, after 300 years, as my mentor puts it, we got the property registered. So it was exciting news for us, especially because of the size of the project as well.
All right, and that's why I wanted to dive in to say how big is the project.
It's about 140 units that we'll be doing. Yeah. So because we have already secured the funding for it, so everything is in place. We're just waiting for for the registration of the project so that we can start with the actual work.
Good stuff. Did it take too long because it's a big project in your view, or because of the compliance around buying such kind of buildings?
It was mainly, I think, the main thing was that made it to take this long. It was the delay from the attorney that we used on this particular one deal.
Yeah. Is it from the seller side?
Sorry?
Is it from the seller side?
So this was appointed by one of my mentors. So the attorney was appointed by one of my mentors that we're working with.
Yeah.
In this particular project. So
you've got someone in your team that's dragging the project to go live.
Yeah, of course.
At that time, I'll pull a samurai sword. I'm like, hey, wait.
Yeah, so I think it was from the attorney side, and the main delay was from the attorney side. But also the lockdown played a huge role in the delays as well. Because remember, for about a space of about 3 months, we were the deeds office was closed completely.
100%, yeah.
And then post when they eased the lockdown restrictions, it was still opening and closing. To this day, they're still opening and closing the whole time. So that caused a huge delay on our part as well.
Right. Okay, good stuff. I'm glad that you're having some good progress happening there. I also have a similar deal, which is also going in like a tortoise. I am in registration, and yeah, it's close to a year now. So
yeah, I know.
So a glass of wine to you. Well done. All right.
Thanks a lot, TJ.
Good. Ladies and
and all the best.
Yeah, go ahead, Lebo.
I was saying all the best with regards to your project as well.
Yeah. Okay, guys, let's jump into it, right? Today we are wanting to talk about, you do know that when we are here, we are always talking about tax and property and tax. That's what we're here for. And today's topic is we cover more around property appreciation and depreciation. And we're going to cover everything around that. Lebo, property does appreciate, and
yes,
it does depreciate as well.
100%.
All right, good. So we have just, in a nutshell, you have just covered the greatest argument that some people say no, property in South Africa doesn't depreciate. So because our market is always going up, so the property is always appreciating. But we want to jump into the intricacies of how do you actually manage these two, appreciation and depreciation, and how does it work within the, how do you get to benefit from those two? What is appreciation of property, Lebo?
In simple terms, the easiest way to explain it, property appreciation it's mainly the going up in value of the property. So let's say I'll give you an example. If you bought a property for 500,000 and today the market value for that particular property it's sitting at R1 million, so it has an appreciation of about 500,000. So if let's say for instance you acquired the property for 500,000 and then you spend another 250,000 to improve the property, and then the market value is still sitting at R1 million, then you still had an appreciation of 500,000.
I like that.
Yeah.
what are the contributors to appreciation? As a property gains value, I'm sure it doesn't just gain value while sitting there, but what are the contributors for appreciation?
There's demand, and so economics plays a role as well.
Right.
Supply and demand. So when there's less supply and more demand, obviously the property market it increases. So it also increases the property value, but also amenities around and improvements around the area as well. They drive up the property value of the property that you own, and improvements and the condition of your property. If you keep your property at a good condition, and you also consistently do improvements or maintenance in your buildings, then obviously that also drives up the property value. It goes up, it appreciates in value.
Lebo, I'm going to ask you a stupid question here, and I'm allowed to ask that question because I'm the host. I have seen.
No, there's no stupid question.
Thank you very much. So, if you are watching this and you are somewhere out there, whenever you've been watching this, if you've got a comment, a question that you want to ask, there are no stupid questions. Lebo did say so, I didn't say that. Drop in the comments in here and ask the question, right? We can only learn by asking the questions. Your situation is very different from where I am. And by us engaging, that's how we're going to learn. Lebo, the question that I want to ask is, we are in South Africa. Property appreciation, in my view and what I've been reading, I see from a town perspective that Cape Town has a greater appreciation compared to most of the other cities. This is a general comment, because if we take in consideration smaller other areas or neighborhoods, that argument might not hold. But this is just from a general perspective. What is the cause of that then?
I think the major role is the economic activities that are happening in Cape Town. Cape Town is one of the best tourist or tourism attraction in South Africa.
Right.
So obviously a lot of economic activities that are happening there, and because of a lot of tourists or a lot of other people around the world are buying properties in Cape Town. And also, like I said, when there's a economics, when there's a demand, a higher demand, and lower supply of a commodity or a service, then that tends to drive the price high, because they're trying to eliminate competition. So they sell it to the highest bidder.
Awesome stuff. Having us covered appreciation in property, and I'm sure it's pretty clear now what is appreciation. In my view, there's a number of things there, a number of factors that come in, Lebo. The market plays a role, right? So wherever you buy, the market plays a role. So you don't have any contribution to that, right? And I'm going to say that with a loose word, that you don't have a contribution to it. But my second comment is going to erode what I've just said now. So the market itself contributes to the appreciation of your property wherever you're going to buy. Then the second component is that you have a role as an investor. You have a role to contribute to the appreciation of your property. And me and Lebo, if you're my neighbor, and we take, Witness, maybe. By the way, Witness, he just released a book. Have you seen?
No, I haven't seen that he's finally released it. The last time I checked, it was still with the editors. So I did make my pre-order, so I'm hoping. Yeah, I didn't do a prepayment. I pre-ordered the books. So I ordered about 10 books from him. So I'm hoping when it drops, it will finally come to my doorstep.
I'm sure there's a queue of people wanting the book. But
I
nonetheless,
think.
we're back again to where we're talking about. I'm your neighbor, and Witness is our neighbor. And collectively, the three of us, and let's take in other 4 or 5 investors, and there we are in the same street. And we are all massaging our properties, meaning that we are, developing our own properties, making sure that they are good. As an individual, I am playing a role because my property that I am looking after has an effect on you, my neighbor. And that has a ripple effect with Witness. That has a ripple effect with whoever all the other guys that are in the same street with us. So it does mean that me and you's contribution individually also plays in the bigger space of things. So I have and this is why I think, this is why I've started loving buying properties in the same street.
100%. There's one author that says, he said in his book, it's good to buy a bad property in a good street than to buy a good property in a bad street. So always look for a bad property on a good street, because that gives it a potential for growth in terms of appreciation.
Awesome stuff. Now, let's speak the opposite of that label, which is depreciation. And whenever we hear the word depreciation from an accounting perspective, we are all like, oh, Lord, I'm losing money.
Yeah.
But in property, for me, I get excited around depreciation, right? But maybe before I share my excitement, Lebo, tell us, what is a depreciation in property?
So depreciation, it's basically it's your acquisition cost. It's when your property loses value in terms of market value. So and you look at depreciation in terms of tax as well. Remember, you do have building improvements, and you paint your property, let's say between 3 to 5 years. So that means your paint that you have painted, it is depreciating over the years. So hence from the SARS perspective, they allow improvements at depreciation costs over the years.
So this is allowed actually to, it's a tax benefit where you do some improvements, and you can claim that, or there is a depreciation factor around that. And then when we're talking about that, so it's not like the property is depreciating because it's losing value. You are doing what you're supposed to be doing, which is the maintenance part, right?
Yes.
But this is pre-subscribed already, that you can then depreciate it.
Yes.
Right.
So just to elaborate more, so you have your property, you acquired your property for let's say for 500,000. You do building improvements for another 750,000. So that means your building maintenance improvements, then you can now allow depreciation over the years, because the paint is depleting as well over the years. So SARS looks at it as a form of, you did maintain your property, but because you are also going to do so in another 3 to 5 years, so let's give you an allowance to say, look, because this will be fainting away within the for the lack of better word, within the next period. So let's allow a certain amount or a certain percentage of depreciation in terms of those improvements, and that also encourages you to keep your building, at a good standard, or at a at a at a pleasing condition all the time. And another benefit that comes from our partner SARS is when you do those maintenance. So those maintenance costs are also allowed as a tax deductible expense in your submissions.
Awesome stuff. I like that, because all of a sudden, I think it changes the game to where I hear a lot of people saying, it's expensive to do maintenance. It's expensive to do. And all I'm hearing, cost.
Yes.
But Lebo, you are changing our thinking here that, yes, it's cost, but our partner is actually saying, yes, spend the money and you can claim it back from me.
Yes.
And that's what our partner SARS is saying.
Yes, 100%. So it's saying, he's encouraging you to maintain your property, and so that it can appreciate and it can stay in a good condition or good standard. And at the same time, he says, look, here's a benefit when you do that. So you can deduct, I'll only tax you on your net instead of on your gross. So after you've spent, you can now say, here's what is left. Tax me on this after you've done your building improvements and your maintenance.
Awesome stuff. I like that. And I think it's just as good as what we do when we go to the bank and we say we want to improve our house, I want to do a development. The bank says, yes, I can give you 1 million, but start utilizing your 200 and then I'll refund you.
Yeah.
So that's almost in the same space there. Lebo, I want to come to another conversation. We've spoken about appreciation. We now know what it is. We've spoken about depreciation. We now know how it works. And out of that depreciation, actually, we've actually discovered that we've got a partner with SARS, and this partner here is willing to play with us. They have prescribed all of these things up front. The question that I then want to ask is that who in my team, right? Who in my team should I be going to actually validate, to say, hey, I've got a door here, and is it tax deductible? I've got, can I paint blue or yellow? Is it tax deductible? It's like, so who is in my team who can be giving me this information? I don't know what I don't know. I just started buying properties, and now we're listening to Lebo and we're like, oh, I can do this. So who in my team can help me?
I think your best bet would be your tax practitioner, because they understand the tax laws in and out. They have all the items that are allowed by our partner SARS to be tax deductible, and those that are not permitted by our partner to be a tax deductible. So they know exactly which items, which expenses you can spend on while you're improving your property, but also benefiting from our partner SARS. So that's your first bet, to go seek advice from your tax practitioner. Alternatively, if you don't have a tax practitioner but you have an accountant, they also have a knowledge around taxes. So you can go for if you have a tax accountant, you can now rely on your tax accountant to also help you with that. Oh, just your CA, if you have a CA that you're working with, they also have a knowledge, although they don't specialize in tax, but they have a knowledge around the tax deductibles and non-tax deductibles that the tax permits or allow for as a benefit to us investors.
In some cases, I get to have people that are asking me questions, and sometimes I engage people. Sometimes I just don't have the time to engage people.
Yeah.
And I have seen where other people would say, you know what, TJ, I was listening to ABCD, and I am doing my investigation now to see whether I can do that or not. And I'm like, okay, great. So you're talking about the bond originator. Yeah, okay, great. So who are you working with now? No, I'm still just, trying to see who can I work with. Okay,
Yes.
right. And then they'll say, and then they'll jump on to say, now we're talking about this tax thing, and I'm also now trying to find out who can I work with as my tax practitioner. And I'm like, okay, great. Have you found someone? No, I'm still trying to figure out. And then they'll go on to talk to say, I'm also looking for a builder. I'm trying to see who the right builder is. And I'm like, okay, great. I met them again, Lebo, a year from now, and I asked the question, where are we? And they tell me that they're still analyzing here, right, to find the right people here. And this is a very sad story, Lebo, but it's our reality in our communities. And then you meet them again after about a year, and you ask the question, what's happening? And then they're like, no, but I found a tax practitioner. I had a 3-hour meeting with him. And you're like, okay, great. Have you bought a property? Not yet.
Yeah.
And they become this adrenaline junkie of finding information and without going out there to actually work. And my question here, Lebo, in the way I've asked that, and I'm not attacking anyone here, but I almost want to come to a position to the fact that I didn't have a tax person before I bought a property. I didn't have the builder before I went to buy a property. Okay. I started doing action. I took action to buy the properties, and then I was like, so who can help me?
Yeah.
As and when the problems were coming up.
Yes.
So, and I want to hear it from you. I mean, you are my fellow investor. You also here. And analyze. What is the term? Analysis paralysis. That word.
Yes. What is this? That.
You can say it also, right? So,
English never loved us.
Right. So let's take it out of our vocabulary and say over-analyzing, circumcising the mosquito, as I call it, before you actually jumping into doing something. In your view, Lebo, what's your view?
My view is, as people, we need to take more action than we spend. We need to spend more time doing the actual work than we are over-analyzing or analyzing situations. So, because remember, in theory, things look different, but in practice, it's something else. It's always the case. You can have your detailed business plan to the last cent, but when you come to the actual work that you need to do, it's always going to differ from what you have planned. So even when it comes to deals, you can analyze all the deals all you want, but when it comes to the actual executing of those plans or those deals, there's things that you would have missed. So it's better to take action when you hit when you hit a dead end. Then only then you can now seek help or twist and change a few things, because the destination should always be the same, but the transport to get you there, you can use different vehicles that can get you to your destination. So like for instance, one of this week I had while I'm talking about problem, this week I came across one of the challenges myself, and instead of me being sad about it, I actually thought of an alternative to solve the problem. That's how you train your mind to always look for solutions instead of problems. So each time when you see a challenge or a problem that you face, then you think of a solution, because you train your mind to look for solutions instead of problems all the time. So in that way, your life becomes progressive, and you move forward. The sooner or later you get to your destination.
You're very right. You speak of the business plan there, and Rita and I, we were laughing at one point because so we went on like 3 years and we'd never done a business plan before. And someone was asking us of our business plan. And I'm like, what is that?
I know what you mean.
Right. But again, and neither am I saying that it's bad for you to be starting to looking at the business plan. I'm not saying that, so continue with what you're doing, and yeah, you can still be able to get to your destination, but you just need to figure out how, right?
Yes.
And we are saying that Lebo and I, we are endorsing take action. That's what we are endorsing. And then everything else falls into place. But let's go back, Lebo. What are the benefits now, right? We spoke briefly about the benefits there, both appreciation and depreciation, right? So SARS is still our business partner. But I want to come back to another point, Lebo, to say, how does the bank view you now, right? So in the bank's eyes, when they're now seeing your balance sheet and you're appreciating, you got a property, that scenario that you gave, and your appreciation is going up, right? And you're still holding that property on your book. How does the bank view you? And likewise on the depreciation part, right? And that's the first one that I want to ask of you. And then the second one will be, how does SARS, our taxman, view you as well? And does it have any benefits at all in your business if it does?
Yeah, appreciation and depreciation both have benefits and both have disadvantages. So in terms of your appreciation on your assets, the bank looks at your appreciation value. So your balance sheet is sitting at a mid rent, and so they looking at you as someone that has equity that can be used as surety for them to gain more confidence to trust you with more money in order for you to increase your portfolio. So that's from the bank side. So if your million rent is now depreciating to come back to 800,000, so your equity from the bank's perspective, it has now decreased from a million rent to 800,000. And if it was from 500,000, your acquisition cost, and then now suddenly your property is now sitting at a million rent. So that means your asset has appreciated with 500,000. So from the bank's perspective, yes, you bought the property for 500,000, but now it's worth a million rent. So they're looking at you as someone has a property that is worth a million rent as opposed to 500,000, of which is the acquisition cost. From the SARS perspective, so obviously, so mostly it will apply on the capital gain tax in terms of your appreciation. So there's what you call capital gains tax. So your acquisition plus appreciation, and then your sale price. So let's say you bought a property for 500,000. You held on to it for about 5 years or so, and then the value of the property now is worth a million rand. So then that means you have a capital gain of about 500,000. So that's where the tax implication comes in terms of appreciation from SARS. And then in terms of depreciation, then obviously there's an allowance or a deduction that SARS says, come claim what you've lost from us as your partner. So we are here to help you grow. But if you're not growing, let's help you not to suffocate. Let's not suffocate you. So let's reduce the cost in terms of your tax that you're paying to us.
I like that. It almost sounds like the government is ready to give us some money there. It's a hidden cost.
It is. It is. So it is them giving us money, but not directly. So it is them saying, look, you were supposed to pay me 100,000, but because of your depreciation, so I'm taking out 20,000. So the 20,000 that was supposed to come back to me, I'm giving it to you. So you are saving money, but in actual fact, you are making money from SARS.
That's the part that I like, Lebo. Because imagine now you're doing 100 million deals. And I think this is where people don't get this, right? In the beginning, you're doing your 1 million deal, it doesn't excite. But now when you're doing multi-million rand deals, it really gets exciting because it's a big chunk of money coming back to you.
Yes, 100%. So you're saving quite a lot of money, and as a result, I mean, you are able to expand and grow your business to the heights that you'd want to achieve.
Awesome stuff. Lebo, we're going to pack it here for today. Thanks a lot, Barry, for being here. You touched on something that I hear a lot of people talk about, and sometimes they are just, these bright conversations. Like, or just around the corner conversations. The capital gains.
Yeah.
We need a session on that one alone because
it's very complex, and capital gains tax, it's a very complex, and so it needs to be unpacked. It needs a bit of time. It's lengthy. There's a lot of factors that comes into it. I know even when I was still in practice, a lot of attorneys and as my fellow accountants, they didn't like this one. They don't like this one, especially attorneys when they have to deal with unwinding of people's estates. So they don't like this part, but it is exciting. It is exciting.
Good stuff. Lebo, it's been great to hang out with you. We'll chat again next week. Cheers and God bless. Bye.
Yes, ma'am.